Welcome to this KPMG Africa Conversation series, coming to you live from the Wild Coast Sun here in the Eastern Cape, where the KPMG Africa Partners Conference is in full swing. We're discussing the execution of strategies across the African continent, the title being Been There, Done That. And coming back to my panelists, Michael, if we could get your vision in terms of where you would like to see KPMG on the African continent 5 years from now.
Number one or two in the key markets. All of our global clients will be investing here over the next 5 years, and we just need to make sure that we've got the right capability on the ground in all of these countries.
Peter, just staying with current news flow, if you can potentially just give us an update on Zimbabwe. You have conquered that territory.
Obviously, Zimbabwe always makes a lot of noise. I think it's very important that one doesn't confuse the drama with the marathon, or that you confuse the latest little hill with the marathon itself. Zimbabwe in many ways is a good place because people, they like to discuss issues which actually are topics throughout Africa, by the way, itself. Clearly in the whole of Africa, one of the big debates continues to be, you know, what is the economic model that's got to evolve for Africa? And that debate will continue, and you see it a little bit in Zimbabwe. We found Zimbabwe, obviously during the macroeconomic turbulence that there was really a testing place. So when you had hyperinflation, when the banking system collapsed, it really was a tough place. But we ran the marathon because we know we're in it for the marathon. We found a way with 18,000 employees to get them through those macroeconomics of hyperinflation. You know, we learned that after 49 noughts, the English don't have a word after zillion. We were joking about that at the time. But then there was a miracle in Zimbabwe that Zimbabwe hasn't given the recognition for, by the way, in many, many ways, in my opinion. How a country in a relatively short period of time, from a December where the banking system had collapsed, to 4 months later, had re-established its macroeconomics by and large, and got it back into a sound footing, which was quite a remarkable story if you follow economic theory in the world itself. And that is typically the Zimbabwean story, that you sit with a country with enormous skills, with enormous enthusiasm, with enormous potential, and when you have serious private conversations there, by the way, we have very good conversations. And I've got no doubt that Zimbabwe could well be one of the countries in Africa that's really going to push the other countries in terms of performance.
Leslie, in general, are we seeing better consistency of policy across the continent?
I'd say one of the real challenges that we face on the continent, Bronwyn, is the lack of, if you like, harmonious sort of regulatory frameworks across government. So, as we know, Africa is not one country. It's 53 or 54 jurisdictions, depending how you count, and that in and of itself is a significant stumbling block. I mentioned earlier on that one of our big problems is this power capacity, because, you know, for an economy to grow, you need power. There is significant hydropower potential on the continent. If we could, for example, I think something like 90% of the hydropower potential is unexploited in Africa. If we could get a number of governments to collaborate, for example, around Inca, if you look at the DRC, we could power most of sub-Saharan Africa, right? So one of the real challenges is that we haven't been able to work across jurisdictions. So each country, each sovereign unit functions on its own. So harmonization of policy and regulatory frameworks is a big and major stumbling block still.
I think it's very important, Marlon, to focus on your experiences and, of course, the other gentlemen that join me on the panel. Take us back 16 months. How easy was it to set up that office in Nigeria? We'll get
16 months ago. I wouldn't say that there was any difficulty in setting up either office, actually, because if you look at what our strategy is, when we took a step back and said, you know, what are we trying to achieve here? What we're trying to achieve is building a preeminent investing business on a Pan-African basis. So what does that actually mean? Well, it means that you probably need on-the-ground representation in your key markets. And so South Africa and Nigeria are just the start. Together, they are roughly 50% of Sub-Sahara's GDP. And so those are natural places to start. And I'd say that they also act as a hub in terms of regional economic activity. So South Africa, obviously in Southern Africa, and Nigeria and West Africa. I think the discussions we had around strategy and setting up of offices is more, when do we open the next office, and where should that be? It will probably be in Kenya. Can't give any specifics around timing. And where are we likely to see the best and most lucrative opportunities for our investor base? And so the actual specifics itself of opening the 2 offices was a no-brainer. I think that the Carlyle model globally is to try to benefit from our international expertise. Obviously, we've been doing this on a global level for over 25 years, but to keep things very local. And you'll see that the composition of our teams represents the geographies that we'll be looking to invest in, and our strategy is very much evolved to cater for the Pan-African markets.
Let's go back to MTN and to Kuma while we're chatting about sharing your experiences. What is the one thing that you don't do in Nigeria?
I need to get clarification on that. When you say don't do, in terms of
if you've got
services that we provide, or?
No, if you've got a lesson for us in terms of an established business in Nigeria. Obviously, there have been challenges along the way. Is there anything that you can highlight for our audience in terms of what doesn't work in Nigeria? Perhaps if I rephrase it to that extent.
Probably thinking that you've learned a lesson or a way of doing things in South Africa, and then coming along to Nigeria and saying we're going to graft this into the system here, doesn't work. So it's very important to come to Nigeria, get to understand the environment, get to understand the market, and then apply policies and procedures and a way of operating that is relevant for that market. I think that's probably the biggest lesson. And it's probably the biggest lesson throughout our operations, which is there isn't a cut and paste. There isn't a South African model which you simply roll out across the rest of the operations. It's very much important to look at each of the countries on their own merits and apply ways of working that are specific to that country. Keeping in mind, of course, that we're a broader group and at some level there has to be some kind of harmonization, but at specific levels, you do need to be looking very much at what works in each of the countries.
You've certainly hit a chord with our panelists, and Michael, you can take the stage first.
Well, I think the lessons, I think, to sum up, is that for strategy in Africa, I think you need a bottom-up strategy where local management is telling you what the customer requirements are, but you need a top-down strategy too to sort of bring the benefit of what is actually happening in the rest of the world and the synergies right across the continent together, as Leslie and Peter have talked about.
And Peter, you've been nodding furiously while Marlon was giving us that information and Kuma was giving us that information.
I think just to confirm, and one can verbalize in a different way, but one of our struggles has been, and we're still busy with it all the time, is how does the executive see themselves and how does the board see themselves? Do they see themselves as a South African company that's investing in Africa? Or do they see themselves as an African country or a company itself? Now, there's a bit of a truth in both, obviously, in the conversation. Our biggest conversation in our organization is not to see ourselves as an African company investing in these other countries, but rather see ourselves as the evolving of an African company that will help the African seam a little bit. Now, to do so, it is very critical, as said before, that you understand a little bit the local dynamics. The dynamics in Mozambique are not the same as in Swaziland, they're not the same as in South Africa, and they're not the same as in Zimbabwe. There's a different conversation in Zimbabwe. And all those things, the basics apply as leadership. One of the basic issues as a leader is to actually observe and to listen with an open mind, by the way, meaning you don't sit with preconceived ideas in the process. And that's been quite a journey. At the same time, you've got to balance the aspiration of the country and that theme, and that's also quite a balancing act. We are very proud today that our head in Mozambique is a passionate Mozambican, but also is developing a passion for the African theme. Our Zimbabwean is a passionate Zimbabwean, but also developing the possibilities of an African theme is becoming much more important in their life. But it's quite a balancing thing. You've got to reckon. It's a bit like having children. You can't treat all your children the same. And it's a little bit of that similar dynamic that you've got to have as a mindset when you run your business. Africa, by the way, needs also some African companies, because that will overcome some of the boundaries that we've got in Africa.
Leslie, are South African executive teams sometimes the biggest detractors to the Africa growth story? They don't believe it.
Well, I'd say that over the last number of years, especially since the early 2000s, when the Africa growth story really started to kick off, I think it was mainly sort of in retail, and then it moved financial services. I think now it's pretty much established that for a South African company to globalize, to move out of South Africa, the most natural place is the rest of the continent. So I think that sort of skepticism, Bronwyn, is a thing of the past. I think it's pretty much embedded now in the strategy of most companies. But just to add to what Peter and Michael has said on this issue of, what works in different countries, I think we still very much see ourselves in terms of our identity within national boundaries. Earlier on, the head of KPMG in Nigeria referred to his partners as, the African partner who happens to be Nigerian. We don't see ourselves like that. I mean, maybe one day, as we develop a greater consciousness about the continent. I mean, in Europe, people do see themselves as European, right? European maybe second, Spanish first. But I think that time will come as the continent rises in confidence and rises in prosperity.
Peter, can I get you just to take that discussion piece further?
Look, I always say in life, or in a company's life, you've got a certain space that you can work in. I think KPMG, with the One African Seam as we saw today, is a great space. There are very few companies that have got a footprint in Africa like KPMG's. We've got that footprint, but then you've got to play out that role. So take, for example, what was said earlier on about regulatory frameworks. There's no doubt in my mind that the countries battle sometimes in the energy field with regulatory frameworks. True, because regulatory frameworks are not easy. You want to create a platform for long-term investment, but you also want to make sure that your regulatory framework to do so sticks there for 10, 15 years. Not an easy challenge. Reality, though, is, as we talked about energy, the better regulatory frameworks for SADC and energy would be regional regulatory frameworks. A simple example, but as a one-liner, would be the following. This region, by the way, has got ample water and ample agricultural land. It wants to kickstart its rural areas. If it today had the same blending regime of sugarcane to ethanol like Brazil's got, 1.8 million people in SADC would have been employed in the direct employment of the ethanol regime. But to get to the ethanol regime, the market is in SA. The neighboring countries, which actually got the agricultural land, are next to it. So different organizations, different people have got a different space in the sun. We've got no doubt where we are as Tongaat Hewlett. Our space in the sun is to help a little bit, particularly in the southern part of Africa, to make this region more coherent and to really get the possibilities in the economic growth in this region out, making sure that people can see delivery. And that's our space in the sun today.
Michael, it's going to be a difficult question for you to answer because without showing favoritism, but what most excites you about the African continent? Is it a country, or is it a specific sector, or an opportunity?
I think the thing that excites me most is the size of the domestic economy and the passion that people have to raise their living standards and to actually seize the opportunity. I mean, Africans are very emotional people, and every time I travel through a country, I'm always impressed with just the fervour and the desire to basically improve my country, whereas elsewhere in the world I see complacency. I actually don't see that here. I see a real drive to seize the opportunity that's available today.
Staying with opportunities, Marlon, having been to Lagos recently, I just look at those numbers in terms of population size, 160 million people. And the reality is, if you focus on that consumer story, there are only 4 shopping malls on the ground in Lagos. Surely that must be a hot opportunity for private equity players?
It certainly is an opportunity for private equity on a pan-regional basis, not just in a Nigerian basis. I think if you speak to most private equity professionals who are practicing across the continent, but also more broadly across emerging markets, what they'll tell you in terms of general trends across emerging markets is the emergence of the consumer and the consumer having more money to spend. And specifically around Nigeria, you're absolutely right. When you look at the size of the country and the size of the population and then the growth rates that Nigeria is currently experiencing, you then ally that to the infrastructure And I completely agree with a lot of Leslie's points around infrastructure. The biggest single challenge, in my view, to growth in Nigeria, but not just in Nigeria, again, across a lot of the countries that we cover, are infrastructure bottlenecks. And I think what you're referring to there is exactly that. If one could, and we've looked at this in many different guises, if one could improve or increase the number of shopping malls and places where consumers could go and shop, I think that's a fantastic opportunity, and those are exactly the sorts of things that we see and we're looking to potentially invest in.
We're going to be taking questions from our audience at this stage. We have deployed mics within the audience, so if you could come forward with your question.
Bronin, this is Josephat from KPMG in East Africa. Thank you very much, gentlemen, for that presentation. Very quick question. Leslie, you mentioned that Africa is largely a 1% a continent, maybe maximum 5%. But in some respects, for example, if you look at money transfers, mobile money transfers, we are the global leader. 60%, coming out of East Africa. You mentioned Inga as well. It could be the single biggest power production in the world. What opportunities, all of you, do you see where Africa, makes a quantum leap and ceases to be 3-5% and becomes 30%, 40%?
Leslie?
If I could just kick off, firstly, the reference I made to 1% was we contribute 1% to global manufacturing. I was just trying to give you a sense of proportion in terms of where the potential opportunity lie. But to answer your question about where are the areas where we could significantly leapfrog, I think financial services is certainly one. You already made reference to mobile payments. I mean, most people in this audience would probably not be or would be aware that M-Pesa, one of the leading innovations that took place in mobile banking, originated in East Africa, and the rest of the world is actually learning from that region. So financial services is going to be a significant area of growth, specifically because we can leapfrog. Like in telecoms, and Kumo will tell you the story of how in Nigeria and a lot of the African countries, there were very few fixed lines when MTN entered, but mobile telephony has enabled these countries to skip a generation of technologies. In a similar way, in financial services, a lot of countries are not establishing your traditional bricks and mortar banks, but will be able to use mobile banking and other forms of banking, which enables Africa to skip an entire phase of development. So there are a number of areas where I agree, you're absolutely right, we will be able to accelerate development.
Another question. Yes, sir, please go ahead.
Thank you very much for your presentation. My name is Shea Bickerstead from KPMG Nigeria. Sometimes when we have occasions like this, we have all these expectations and all this optimism. Sometimes it's good to take a step back and have a contrarian view. Maybe not a contrarian view, at least express something a bit contrarian, and say to yourself, I mean, what can rise out of the woodwork and bite us? And I'd like to address my observations and questions to both Leslie and Peter. We've talked a lot about growth in Africa, and we've talked about 6%, 7%, 8.5%, and things like that. So we recently did an exercise in which we took a look at this, GDP per capita, and surprisingly, the countries that came to the fore in Africa, the first country was Equatorial Guinea. Then you had Angola. Then you had Gabon. And you take a look at that and you say to yourself, one has to be a bit cautious about this, because then you're taking a look at those, in those countries, you're taking a look at the distribution patterns, and you're saying, oh yeah, sure, we have wealth, we have growth, but do we have development? Because this wealth, and this growth, are concentrated in a few hands, And my issue then, basically, with regard to going forward with Africa is this, is that if we don't resolve that, then this is something that can come to bite us in the future, And I'm a bit worried about that. The second question I want to address, basically, and also have you guys answer it, is the issue of, you take a look at some African countries. I take a look at Upper Volta, I take a look at Burundi, I take a look at Lesotho, Swaziland, and I say, look, can this country really make it on their own? Which is why the issue of the integration, the economic integration of Africa becomes, extremely important, And in this area, probably the people that can resolve it for us, are the politicians. So I'm quite happy that tomorrow morning we're going to have a breakfast with the president of the African Union so they can tell us, what we need to do. Because, see, if you take a look at the African region, there isn't, a lack of people with a drive, with the entrepreneurship. Sometimes, I'm not a Tea Party person, but sometimes I feel that what government has to do is to do what they're supposed to do and just kind of get out of the way.
Okay, I'm going to get that question back to panel. Leslie, if you could answer the first part of it, please. And Peter, the second part in terms of your SADC expertise.
Shay, I agree wholeheartedly with you. I think the often economic metrics are sort of misleading. Simply looking at sort of economic statistics is not really very helpful. In fact, in the early 60s, Africa also experienced a spurt of growth, but that quickly sort of fizzled out as a lot of these countries embarked on some rather short-sighted policies, for example, nationalizing mines in the case of Zambia and other respects. One of the things we haven't spoken about, any of us in this discussion to date, or we've not been asked yet, is about government, because government and the public sector are not represented here. But I think there is this big C word called corruption and inefficiencies in public sector, which we have to talk about because it impacts very much on economic performance, right? So unless we are able to transform the way we look at the public sector, I think we're going to be sitting with this problem of ascribing the problems to government. We have to, I think, be in a position where we can inspire young people to not only want to go and work for KPMG when they qualify as CAs, but want to go and work for the revenue services in their respective countries, or want to go and work for the departments of finance in their respective countries. So I agree wholeheartedly with you that we can only do so much as the private sector, but we need much greater, much closer collaborative partnerships with the public sector in order to solve these bigger problems of inequality which you made reference to.
Peter, if we can go to the SADC question, Lesotho, Swaziland, can they make it on their own?
Look, I think first of all, when we talk about economic growth in Africa, sometimes it's useful to make a split here. And if you take out oil and you take out natural resources that are exported out of Africa, that's got a certain dynamic. It's got a lot of benefits, obviously, because there's a huge flows, there's foreign direct investment flowing in that area. There's definitely beneficial trickle, I would nearly call it, maybe I'm a bit unkind, towards the continent of those sort of investments. But essentially, there's another picture about economic growth that has to take place, which are all the other industries that are not now extracting industries. They're not taking oil out or taking resources out. Those, by the way, ultimately, is what governments and people should exercise their mind, how successful you are in those businesses. Even some of if you look into the Middle East where they extract oil, you just look at Dubai, you see how people are exercising their mind beyond oil. What will there be in the process? And that journey, by the way, on this side, it's got relatively few corporates that operate in them. Sometimes even governments in Africa concentrate a lot on this side, but concentrate, in my opinion, too little on that side. And it'll be useful if all of us shift a little bit towards this side. Agriculture, by the way, when you look in many countries in Africa, we talk agriculture, but when you look at what money actually flows to support agriculture, it's very little. And it's the backbone of many of the economies and many of the possibilities. Manufacturing is the same issue. Occasionally we talk about adding value to our mineral resources, but the manufacturing sector is still low. Obviously, the consumer that's starting to develop from this side, is kickstarting a lot of industries. Telecoms, etc., are kickstarted in many countries from that side. But one mustn't, and then if you look at Lesotho and Swaziland and those smaller places, and in many other African countries like that, if they don't have these natural resources, they battle on this side.
Michael, you want to give us a little more colour?
Just two very quick comments, Bronwyn. The first one is, clearly, I think one of the key success factors in a successful society is equal opportunity. And you only have to look north to the Arab Spring or in South America to see when you get a concentration of wealth in a few that is highly detrimental to the economy and a recipe for social unrest. The second comment I wanted to make was in relation to the corruption point that was made. And I think we talked today a lot about being successful in Africa. I think one of the key things is to think also about what is in the minds of the foreign investors. And the whole business ethical ethos has changed dramatically in the last 2 years. And whether it's regulatory concerns around corruption or just really business reputation, dealing in Africa these days, the major multinationals, the global investors, are going to be very pure. They're going to deal with highly reputable organisations, and they're going to want to have audit trails and techniques that actually prove to their shareholders and stakeholders that they are going to be responsible corporate citizens. We need to factor that into the way we do business in these countries.
Marlon, my director informs me that you were nodding wildly in agreement with what Peter Stader was saying just a moment ago. Would you like to share your thoughts?
Yes, I mean, I agree 100% with what Peter was saying. I think it's very, very important that we develop, and what we've seen over the last 10 years is this emergence of the consumer. That's a very, very important macro trend across the continent. I think a lot, and to tie into what Martin was saying, a lot of the problem, I think when you talk to an international investor who's thinking about either investing in Africa in any way, shape or form, one of the couple of things that they say, number one is corruption, which Leslie talked about, and number two is natural resources. And I think it's very important that we start to move away from natural resources, be they oil, be they copper, be they platinum, etc., and develop other parts of the economy. And what does that actually mean? What it means is that we need to broaden and deepen our skills base and our experience base. And I'd say that's one of the biggest single challenges that we face
Marlon,
across the continent,
I'm cognizant of
investing
time.
in companies or trying to develop and grow companies.
Marlon, I'm going to interject there. I'm cognizant of time. We've got 1 minute till the end of the show. And I just want to go through everybody's thoughts on a last point in terms of the been there, done that theme. Take your biggest lesson that you've learned in executing your Africa strategies and share it with our audience in just a few words. Michael, if I could start with you.
It's critical to have strong local management.
Short, succinct, and to the point. Well done, sir. Peter.
Execution is possible when you bring all the stakeholders together with you.
Leslie.
I think making sure that you have the sort of regulatory side sorted is very important.
Marlon, the most valuable lesson learned from your side?
Strategy is absolutely crucial. The strategy and how you execute that strategy is very important.
And Kumo, finally to you, sir. Let's get your thoughts on what is most significant in terms of what you have learned in executing strategy across the African continent from an MTN perspective.
Probably two things. One is the point I made earlier about having tailored solutions in each of the markets where you operate, and making sure you address specific issues directly. And probably second is this point about local partners. We haven't spoken about local partners today, but it is an important part, I think, of MTN's success story, that you ensure that you have people on the ground who understand the local environment, who can help you to traverse some of the local challenges. I think it is important.
Thank you all for joining us for this KPMG Africa Conversations series, coming to you live from the Wild Coast here in the Eastern Cape, where the KPMG Africa Partner Conference is in full swing. We've been discussing, been there, done that, with those companies that have executed clear, succinct strategies across the African continent. Until next time.